Hi, Ashwin.
Hi.
It's good of you to talk to me on a Saturday evening. The reason why I'm engaging with you today is because, as we all know, there's been a kerfuffle in the markets since March of this year, and many people are trying to make sense of it. The kerfuffle has been around inflation and aggressive interest rate hikes. Now, October the 19th is the date. Bank of America says the market would possibly bottom out with the S&P around 3,000, which is over a 600-point drop from current levels. Quite a drastic drop. So it does appear that things are going to get worse. So I want to talk to you, and I'm sure you have a plan for how to deal with this market scenario. What is your plan?
Thanks, Tessie. Yes, you are right, Tessie. Things could possibly get worse before they get better. Let me explain to you why. Stanley Druckenmiller, which is the former chief trader of George Soros, has warned that the Fed has never been able to control inflation. Okay, this is based on facts. This is the reason why UBS says that if there's a recession in 2023, the Fed might have to cut interest rate 3 times. Okay. Now, what is exciting is this. This video is about our new product, not so much about discussing economic policy. We are unveiling today a unique index-based strategy that will make money for investors regardless of market direction. Okay. We will not be investing in individual stocks, bonds, the US dollar, nor the fear index, which we call the VIX index.
So how does this product make the retail investor money exactly?
Okay, before I tell you that, let me tell you the extent of the chaos that has happened in the markets since March 27. Since March 27, the Dow has dropped slightly more than 15%. The S&P has dropped into a bear market, plunging slightly more than 20%, while the NASDAQ has dropped slightly more than 26%. The numbers are a bit better because on Friday, the market went up slightly. So the numbers are a bit better. But now, as usual, when a market drops, fund managers will tell you, buy the dollar to protect yourself, buy bonds, do a hedge, or buy the fear index. But we have done extensive research since March with our algorithm. And we find that these hedges are not effective. They do not work effectively. Okay, the correlation is not so high. Okay, and because of that, there's another factor that has made things worse. Usually, when a market drops, when the stock market drops, people buy bonds, and they practice what is called the 60-40 ratio. They buy 60% stocks, 40% bonds, because they think that when the market drops, bonds will go up, so that 40% bond portfolio will protect your 60% paper loss in the stock market. But unfortunately, this time, that 60-40 ratio is dead. Why? Because of the anticipation of interest rate hikes, which are happening right now. Stocks are down, bonds are down. So where do investors find refuge? So right now, I can tell you right now, I'm not speaking bad of anyone, but because of this chaos since March 27, every investor would be having a paper loss. Now because of this, we were inspired to create a new product where, using an index strategy, okay, the client can make money both ways, whether market up or down. And let me add a very important point. This index strategy has a correlation of more than 95%. Meaning when the NASDAQ goes down, or the S&P goes down, or the Dow goes down, when we do this index strategy, you will make money when these indexes drop. You will make money.
Really?
And when the market bottoms out, when the market bottoms out, and I hope Bank America is right, or even if the market doesn't bottom out in October 19, even if it takes December. So from now to December, you make money on a falling market. After December, if UBS is right and the market goes up by cutting interest rates or whatever it is, when the market bounces and goes up, you make money again. So with this index product, index strategy, you make money when the market is dropping, and you make money when the market is going up. What can I say to you?
I'm amazed. You know, March, April, May, June, July, August, September is a long time to stay anxious and uncertain. And now you have unveiled this product, index strategy product.
Yes.
Has this been done anywhere else by anyone else?
Not that I know of. I've never seen any bank, any financial house offer this kind of strategy. The usual words they always say is buy the US dollar, buy the bond, buy VIX index, buy dollar yen. This is what usually happens.
And
but
how
dollar yen has
certain,
gone up.
like you say, a 95% correlation is
Yes.
extremely good. How sure are you that your product will deliver profits either way, up or down market?
In the last 2 weeks, when we started this, in the last 2 weeks, our clients are already making money. Our clients are already making money on this product when we started in the last 2 weeks. And if you look at your profit and loss statement, Bessie, you are making money as well.
This sounds to me a very sure-footed way of going forward, Ashwin.
It is a sure-footed way because we are concerned, listen to this, we are concerned with the correlation. The correlation is the most important factor because if you look at dollar yen, for example, it doesn't always go up when the stock market drops. That was what we started off with: dollar yen, dollar index, year index. We started off with that. Along the way, our algo showed us that these correlations are not strong. Sometimes they work, sometimes they don't. We want a correlation that is at least 95%, not even 90%.
This the keywords are 95% correlation. The other one is index strategy.
Yes, meaning number one, the correlation 95%. Number two, we are not buying individual stocks. We are not buying the US dollar. We are not buying the dollar index. We're not buying the fear index. This is a very important thing. So we are doing something on an asset class basis is totally different. We're going to do only indexes.
And you are saying that this has not been done before by anyone you know?
Not that I know of. I don't know whether anyone is doing it secretly or whatever.
And you are certain that this would deliver profits in an up or down market?
Yes.
So how soon can an investor see realized profits?
You see, the good thing about this product is we will be making profits every week to 10 days.
That sounds astounding.
There are 5 trading days.
Amazing.
There are 5 trading days in a week.
Yes.
So when I say 10 days means about 8 trading days in 10 days. Okay. But we will be giving a payout every month.
This sounds revolutionary, Ashwin. Would you like to say?
This is not from my brain. This is not from my brain. This is from an algorithm called Human Quant.
I see. I see.
We are sitting here today because of Human Quant, not because.
And I don't suppose you would share any further information until one signs up.
It's not too fair for us. I mean, we've put in so much work and so much investment, and if we start telling you everything, then what? Then what are we here for?
So let us go back and reiterate what was said. So we are taking it that this volatility will run itself out, say, end of the year or the fourth quarter.
Yes.
And rather than stew in this uncertainty, volatility, you are proposing this radical, revolutionary product called the index strategy, which will be able to deliver profits in up or down markets, because you would be staying away from equities and FX and other products. You're dealing with indexes.
Yes. Now, let me give you the flip side. If you're an investor right now who's having a paper loss and you refuse to do this strategy and say, I don't want to do anything. So every day you're sitting down there, market is dropping and your paper loss is widening. To us, that is a sitting duck. So if the market drops for the next 6 months, your paper loss will be widening. And all you have to do is get margin calls and you'll be topping up money, talking up money. Why don't you invest in a strategy that will arrest your paper loss and make money for you while the market drops? Think about it. Instead of sitting down there watching the market drop and your paper loss widening, why don't you put in some money to prevent your paper loss from widening, and the money that is made from the market drop can be used for your paper loss? Think about that carefully.
Am I hearing you say that this is a side-by-side program,
Yes.
a product that would be applied next to another investment strategy?
No.
Or it's one and everything in one?
This investment strategy, okay, can be used as a hedge or can be used as an outright position.
I see. Okay.
Supposing you're an investor now who has already got, before you join us as a member, you already have stocks which are losing money.
Okay.
So this strategy, like I said, will make you money in up or down market. So if the market goes down from here and your loss is widening the other side, the profits from the market drop here will arrest your paper loss the other side. It backs out. It evens out.
Okay.
Okay.
So I would recommend rather that everyone who is an investor contact Ashwin to hear more. And I'm sure that you are customizing or adjusting your proposal based on each one's risk appetite.
That's correct. Yes, that's correct. What I'm going to say is this. You see, like I said, if you are going to sit down there and do nothing, your paper loss is going to widen. Every investor, this I've got to say for everyone watching this video, every investor on this planet, okay, or any investor in Asia who is holding stocks right now and losing money, you need to deploy a strategy that will make you money while the market is dropping. That is very important. Whether you do it with us or with your bank or whatever you're going to do, you have to, every investor who is holding stocks right now, you have to deploy a strategy. You have to, I say, to make money when the market is dropping. This is why we've come up with this. Because we realize that every investor who is holding stocks right now and making a paper loss needs to make money when the market drops. When the market goes up, no problem. Yeah, when the market
hedge strategy,
complicated words, Tessie. It's got a hedge strategy. You can make money by itself, whatever you want. There's basically you are buying an insurance policy. If the market goes up, if your market goes up, your paper loss lessens. But if the market goes down, this will arrest and make money for you when the market is going down. If you do not do this, the market keeps on going down and your paper loss is widening. Everybody needs.
So this is counterintuitive. You just have to do it.
You have to do it if you want to arrest your paper loss and you want to have some kind of security insurance policy that so that if the market goes down, you can make money. Right now, you don't have this. The market keeps on going down. You are losing money.
Yes, yes. So how much is the minimum amount that you require to engage this program?
Our subscription fee is $5,000 for 12 months. Okay. Now, committed capital for this program is $75,000 minimum. Okay. So how does it work? You open an account with an online broker. We'll tell you what to do in your name. The money is in your account in your name. And once you are ready and you sign a power attorney with us, we will step in and we will do the program for you in your account in the online broker.
Okay.
That's how it works.
So I still suggest
our fee for that is $5,000 for 12 months. And we do charge a 20% performance fee on profits.
Like you said just now, it's bespoke, it's customized. So I do suggest anyone, any investor who's interested in this program to contact you, Ashwin, so that, they can talk to you about their personal portfolios.
What I'm saying is this, very important. Any investor who is holding stocks right now, you need to have this so that you can make money when the market drops. This is very, very important. When the market's going up, everybody's happy, hunky-dory, everybody's happy. But you don't have an insurance policy in place. What happens if the market drops?
Yeah.
I mean, there are various ways to do it. Like I said, banks will tell you buy dollar yen, buy bonds, whatever, 60-40. But we are bringing to your attention now that those hedges are not strong. We are giving you something that's got 95% correlation.
This market seems to be facing unprecedented volatility since March, Ashwin.
Ceci, see, that is why we call it risk management. We manage that risk. We come up with new products to enable you to manage that risk. It's called risk management.
I can imagine so many investors now facing margin calls and anxiety.
Yes, and so in the next 6 months, if the market drops another 5% in value, the Nasdaq, the Dow Jones, and the S&P. I ask you a simple question. No hard sell here. What are you going to do if the market drops another 5% in the next 6 months? What are you going to do?
Well, I'm so grateful that I have your expertise. That's much I can say.
Thank you, Jessie.
So, how do we contact you, Ashwin? I think everyone should give you a call, to discuss with you their personal portfolios going forward.
Well, my email is ashwin@ppchk.net. You can contact us on WhatsApp at bit.ly/algotrader. And our videos on YouTube, it's bit.ly/algowealth.
I particularly love the part where you say profit in up market and down market.
That's correct.
And payouts every month?
Yes, we will aim to pay out every month. Okay, we think that's fair. We won't say every week because sometimes the week is shortened by public holidays and things like that. So every month is fair.
Okay. Well, whatever it is,
we will not put a specific amount as to how much we will return every month, but there will be returns every month.
Whatever it is, it certainly sounds better than doing nothing and being a lame duck.
Down here, like I say, if you sit down here and do nothing, the market drops and your paper loss is widening.
Yeah, I can see the consternation in your face, Ashwin. So I'm so grateful that you're sharing this opportunity with us.
You see, Jessie, people may think we are hard selling this. We are not, because we don't have to do this for the man on the street. We can do this for our private clients, which are minimum 3 million and 5 million, and do it, and they're happy. But I, again, always think of the man on the street. I always do that. That's why I'm sitting here. I can not bother and just do this for our private clients. It's easier for us. 3 million, 5 million, no problem. Yeah. We are willing to bring the minimum down to 75,000 and help the man on the street.
Yeah, I know. It's the man on the street who doesn't have the expensive banks and relationship managers, and there you are. So thank you so much.
Thank you. Thank you.
And I'll be on call with you again soon, Ashwin. Thank you.
Thank you very much.